What I've decided to do is take a little bit more of a hybrid approach. Let me turn my camera on too, and see in case people might want to see what I look like right now. So something that I've decided to do is I've decided to um, make my VIP section and the content that I'm still developing and all of that stuff, but to make it joinable once a week on Wednesday. Right now, it is Wednesday. Um, so, Wick Sauce Wednesday, right? Wick Sauce Concepts. Under the umbrella of Wick Sauce Concepts is my group called Romel's Refinery. Under the umbrella of Wick Sauce Concepts are my different strategies. Wick Sauce 2.0. 1.0 is already on YouTube, but Wick Sauce 2.0. And the Holy Grail is what I call it, right? Which is what a lot of people are thirsting after. But um, so all of that is going to be available on the WAP. I'm still working on getting the videos out, and I'm just going to pace myself through them. I'm going to upload a couple videos every other day until it's just fully complete, all right? But what I'm going to do is this is my way of being selective with how many people can join. And I'm just gonna make it open and available to be joined every Wednesday for Wick Sauce Wednesday. So with that said, it's open now, and you don't have to join now. Stay here, right? Get the sauce that I'm about to deliver on this live stream. And if you want to join, you can join by the end of the night. I'll turn it off before I wake up, or I'll turn it off when I wake up in the morning. Um, so on my page, it's right here. This is what my store page would kind of look like. I have a lot of other stuff. You can't see this. It's just this $50 a month. It's $50 a month, or eventually I'm gonna delete this pricing option. It's not gonna be here. I made it for one person specifically, but after I made it, they told me I couldn't delete it until I remade the entire thing. So if you see it, you see it. It's either $50 a month, which is 600 a year, or you can get it for 42% off, which I think is a crazy steal. Um, I'm just not. I don't care about it. Both are palatable and digestible price points for even the level that I offer right now at this point. And then all I have to do is just um, go back into my products and just hide it. If I want to do that, I'll just come here and hide it, and then it won't be on that store page anymore. So that's what I'm gonna do every Wednesday. Um, so that's that announcement. Now, moving on from that, Zeke, go make a pop up. Yeah, no, Zeke, Zeke stays with me now. That's funny. He just got in last night. Which one has the Holy Grail? They both have the Holy Grail. It's two pricing options for the same information, same access. You get Discord access, live trading access, special trade ideas. I don't give signals per se, but if I have an idea, I'll put it out there. I only obligate myself to trade about live trade at least like maybe like 3 days a week. Um, but I try to do it every day. You know, you get my VIP notes, a lot of information that I've been putting in here for a long time, just to show you how long I've had this group, or all of this stuff. It's been That's February. Like it's been a cool minute. This is November last year, and I don't even have my definitions all complete, but that was November. So we've been around like for a smooth little minute, the structure and the ideas of things. Um, and it just took time to really get up and operational. Is this gonna help out beginners? So that's the thing. How new are you? Are you new to the point to where like you don't know like what a high and a low is and how to and what an uptrend is and what a downtrend is? Or do you know all of that and you know how to track price action? You just need help to figure out how to enter your trades. Like, are you really a beginner or would you say you're intermediate? Because I know there's a mix here. There's a bunch of people who know what they're doing, a bunch of people who don't. You know all that. You need help to enter trades. Okay, bet. So where I'm gonna start today is I'm gonna start by going over how to properly trade ICC. That's all I'm gonna do today. Well, no, okay, I'm not gonna say that, but that's where I'm gonna start. Let's just get you to that point to where if you want to trade like Psy and trade ICC and swing trade, I'm gonna show you how to do that. I'm not gonna show you how to do anything other than that. See, for right now, you see, so the dude said no, like Romel. I trade differently. I use the same principles, but they're applied differently. So it's another level. It's a little bit advanced. Yeah, that this is being recorded. It's advanced, but it's simple. Like if you already know ICC, and then I show you how I look at it, you'll be like, oh wow, that makes complete sense. So I can fast track you, but you got it. You have to know you have to know ICC. So yeah, just everyone in the chat understand that this is open to everybody right now. Like everyone who like VIP and community members, they're all here together right now. Okay, so yeah, like you want to know the Romel way. I know you want to know the Romel way. I just opened that up by accident. You have to know ICC to truly understand this. Because ICC is not hard, it's basic. So what I'm saying is you have to know the basic stuff. The Virgo way. That's funny. All right, that nigga Rio's like, less yapping. It's about the money. Let's get started. Let's talk about the money. All right. So you guys may have seen this screen on my YouTube channel, right? My infamous black screen where I do all my teaching from. So we're gonna call this ICC the right way. Okay, that's what this is. Important, guys. Let's be sure to answer this question. How do you decide which one to use? That's a good question. Let me do this. Here's the thing. You still have to know ICC in order to do any of them. It's bro, it's not about you being here for me or here for side. It's about we're being here to figure out what we don't know. And the thing is, it's just price action. It's not size strategy. It's break and retest. How do you do it? You know what I'm saying? Because at the end of the day, it's all the same stuff. That's my perspective. It's all the same stuff. But I'm gonna make sure that I have this screenshot. All right, cool. All right, ICC the right way. Let's less talking, less talking, more listening. Cause I'm gonna put in some time today, and it's gonna be recorded. So if you gotta dip, go ahead and dip. If you don't have to, stay and ask questions. Even if you can't pay attention and you hear me say something, ask a question. You can go back and see what my answer was later. Okay, but let's just get started. So ICC the right way. ICC, what first of all, what is it trying to do? The like what's the goal? And the goal of ICC is simply this: to enter into trades with confirmed trends. That's it. Okay? Enter trades with confirmed trends. That is the goal. So now let's break this down. We need to figure out how to enter, and we need to figure out what does this mean. That's it. So this we need to figure out where we're entering, and then we need to figure out what other color do I want to use. Orange. That's a little too close. What's pink? What's the opposite of pink? Green. We can use green. We need to figure out what is a confirmed trend. Okay. Cosmo, and Wanda. These are going to be our two colors that we alternate with today. So, to the first thing that we need to actually dive into is what is a trend. Okay, so a trend consists of a bunch of ranges compared to other ranges. What do I mean by this? You're going to have just give me a second. It's all gonna make sense. All right. What do you think I'm drawing? I'm drawing candlesticks. Simple. So, all right. So, normally we'd be like, all right, price went from here down to here, down to here, or up to here. And this would be that diagram that you see all the time or wherever of just price action, right? And this is how we track our highs and our lows, okay? So a confirmed trend has to do with understanding that we have a low in the market and we have a high in the market, but how did we get from this low to this high? Well, there's a reference point, and then compared to these two, this one is a higher low and a higher high, a higher low, and then a higher overall high. Okay? Then price comes down and it makes another higher low, but then we make a lower high. This is step one, understanding that the pattern of what makes something a uptrend has changed. Keyword high, right? This aspect. Downtrend is the opposite. And these two are not equal, right? They're not the same. So Depending on whether or not we're making higher highs and higher lows or lower highs and lower lows, that's going to determine whether or not we're in an uptrend or a downtrend. Okay. So, what are we doing? We are tracking, tracking our highs and lows. So, tracking your highs and lows is a prerequisite to being able to even trade ICC properly. And a lot of people do not know how to do it because even Sai didn't know how to do it, unfortunately. I tried to teach him my perspective once, and he was like, yeah, it's valid. He just don't get it fully how I interpret things. Um, because there's layers to this, and we'll unpack it soon. I'm gonna teach you the right way on how to trade ICC, right? So this right here should be raising a real big red flag to us. This lower high, like that is a red flag and a half, right? Why on earth are we creating a lower high when we're in an uptrend? So then the market can shift right here. As soon as we get this candle closing right here below this low, this higher low, the creation of this candle is the lower low before we even get here. This is the lower low already. Why? No, no, this is the lower low, and this is the confirmation of this trend. So where does this confirm? The confirmed trend is literally right here as well, at the same point. A lot of people would look at this and they would normally call this what? They would call this an indication, right? That the first I in ICC. They would look at that and call it an I. And so the reality is that this is not an indication. It's actually it's not an indication. It's in for lack of a better words in my mind, it's confirmation because that's what we're looking for. We're looking to trade the trend that just got confirmed. Now, the big question is why? And this is why so many people like Romel. Like, because Romel does a good job at answering this right here. So if you want to know why, that's why people gravitate to me. If you want to know what, then people usually gravitate to Sai, right? Um, let me raise this up a little bit. All right, no, I'm gonna write as hard. So if you want to know what, then you usually go to Sai, right? You just put that as a little sidebar over here. So let's start to unpack this, right? Let's unpack why we're actually entering, right? Because it's pink. We got to pay attention to this. Enter. Why are we entering where we feel like we actually have an indication? And if it's not an indication, why is this a confirmed? Why is this a confirmed entry area? Why is the trend confirmed here? Like I thought we had to wait for the correction. It's because the order matters. when the market structure shifts, the order in which these highs and these lows shift matter, and it changes the dynamic of when you should enter and when you should not enter. Okay? So because we got the lower high first, your breakout that you normally wouldn't take is actually the confirmation of the whole entire trend. And this is why, and this is where we get pretty nice support and resistance plays. When the trends confirm like this and they break a low, after already creating a lower high, like up here, and then we get the confirmation. Like this is really your indication up here, to be honest with you. I'm just gonna write I. Like this is really your indication. This is really your change of character. Because is it in the character of an uptrend to make a lower high? Yes or no? I really be asking people this. See, that's crazy. Listen to what I'm saying. Is it in the character of a uptrend to make a lower high? No. Exactly. Unless no, the volume doesn't even matter here. And I'll get into that later because there's something called internal market structure. The right answer is no, okay? If you ever forget, try your best to remember what an uptrend and what a downtrend consists of. I kid you not. It it does baffle me a little bit how people can forget things. Um, I had a student that was doing well, and I don't know what happened, and they psyched themselves out. And I remember giving them a one-on-one, and like they had really progressed. Like I had been working with this student for like 3 months, and then we had a one-on-one, and they literally forgot how to track their trends. You should have saw how well with this student. I was confused, so I didn't get mad at them. Typically I get mad because I'm like, you don't forget this. Like, how are you forgetting your ABCs? But anyway, I'm like, I was so confused as to how did you genuinely forget how to track this. Higher highs, higher lows, higher. The top shelf, oh, it's too high. Can you reach it? Oh, it's too up there. Like, duh, uptrend. That makes so much sense. Downtrend, low, going down, low, low prices, down. We have to go down too low. Like, that's that level of like common sense that I can't I can't give that to you. That's that level of competence that I can't give to you. I can teach you everything and it's gonna make sense, but you have to be competent. And the thing, so why I don't teach beginners is not because they're not competent. Unless someone shows me they're competent through, their whatever vernacular, there's no way for me to like know if someone is competent, and I'm not going to waste my time to try to give everyone the chance to prove that they're competent to me. So the only way I can effectively use my time is to teach people who at least have this down. And then people who don't have it down, I just lob you over to my other students. They have patience that I don't have. Because I will get very upset that you don't understand this, especially after I explain it. And then I give you a week or 2 weeks or even a month to really learn how to dive into it. You send me screenshots of hey, am I doing this right? I'm like, yeah, and then you forget it. Don't piss me off. Anyway, let's move on. So, um, it's it's not in the character of an uptrend to make a lower high. Okay? It's not in the character of your mother to be like, hey yo, let's play some Call of Duty. Unless she just built like that. It's not in the character of your father to I don't know, like, you know what I'm saying? It's just, or it's not in your, it's just not in the character, is what I'm trying to say. So whatever analogy you have to use to whatever do that, it makes sense. I was gonna say built like that because the girl I'm talking to plays video games, and so and she's like so I'm like, okay, maybe she is gonna be built like that. We'll see. So anyway, so price is coming down, and then we break this low, right? So when we get a candle closure, I need to signify that. So where do we enter? This is where closed candles start to matter. When we get a closed candle closing below this low of market structure, aka the low of this range, I'm starting to give you a hint to the Holy Grail. I ain't gonna lie. But when we get a candle that closes below the low of this range of bullish candles that created a lower high in the market, that is simply your confirmation to take a short. The trend is confirming here, and you enter here. And so, where's the goal? You see how this the pink and the green are at the same area? This is what we're trying to always do, no matter what, if we trade ICC, because that's the goal. Enter trades with confirmation. Or no, no, enter trades with confirmed trends, but enter trades, even I could say when they confirm. That's what we're trying to do. So your entries should be wherever your trends are confirmed. If you're using a 1 hour to get entries, does it matter what time frame the candles close on? Use the 5 minute. That's the aligned time frame. I can show you some examples of why you don't always want to stick to the 1 hour. A 1 hour candle close is great, but what if that 1 hour candle closed hella far down? And because you're waiting for a candle close, now you have a bad fill or a bad, like, you 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 end up having a bad price. So typically the way that goes is if you're analyzing the 1 hour, you want to sort of be entering on the 5 minute. And then if you're analyzing the 4 hour, you want to be analyzing the 15 minute. Or no, sorry. I want to be very specific with my words, okay? You analyze the 1 hour, you don't analyze the 5 minute, you enter on the 5 minute. You don't need to be drawing price action out on the 5 minute chart. Enter on the 1 hour, no, analyze the 1 hour, enter on the 5. Analyze on the 4 hour, enter on the 15. Yeah, it's being recorded, Eric. It's all good. So let's just keep it pushing. Now, here is just extra information. This is a phenomenon, or a phenomenon, a phenomenon. A phenomenon is singular, right? Whatever. Phenomenon. I think that's how you spell it. I don't know. Anyway, point is that a phenomenon of of when the market turns over like this, where we get lower highs first, and your breakout is your entry. Usually, you get very nice support and resistance. Your corrections don't actually have to go back above price like typical. You don't have to wait for price to go all the way back up and then come all the way back down. very, very, very often the market just goes right back to where, see, I'm giving you clues to the Holy Grail, but the market goes back to where the trend confirmed and it picks up where it left off. I just kind of leave that where that's at. Okay. Sometimes when the market turns over in this way, you actually get a gap left in the market, and the market will find itself trending down, and then it might even do this and then keep pushing down. So now you have something called a fair value gap. Where is it? It's all in this area, right? In this area of price action between whatever high was made and whatever low was broken. And then all of this just becomes a fair value gap. And these are created because why? This is what because the market structure shift, the breakout, this was so strong of a confirmation that it caused the market to sell and gap in the market because the breakout was the confirmation of the downtrend. So when you take the breakout, sometimes that might be the best trade you get because the market will keep trending, leave a gap in the market, just keep going down. So, and this is easy to do if we just track our highs and our lows, wait for and wait for our closing prices in relation to our highs and lows to confirm trends, and then we're good. What? So between the new lower high and the previous. Oh, okay. So between the new lower high and the previous higher low. Between the new lower high. No. See, that's the thing. I don't still no 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 no. I literally mark out my gaps in the market very different. So if this is how the market turns over, we have to think about this, right? This is, first of all, this is how I mark out my gaps. This is my fair value gap, right? Okay? But you got to understand that there's candles in here, right? And then at some point there's going to be a maybe one candle here and another candle here, and there's candles in here. The way people would typically want to mark their gaps out is they would want to find like whatever the wick was from this candle here and this candle here, right? And then they would mark out this whole area. They would mark out this whole area like a gap in the market. And that's not how I mark it out. Right? And so then they would be marking all of this out. And that's one FVG. And then they would mark this one out. And be like, that's another FVG. Now I'm not gonna dang bro, see, I'm not gonna lie. It's very hard give to not spill the sauce out right now. But then they would mark this like it's another fair value gap, right? I don't do that. I don't mark my gaps out from candle to candle. Even if this was one whole big candle, I wouldn't mark it out that way. I mark out my gaps from market structure to market structure. And that whole thing is my gap. Okay? I'm gonna go ahead and drop this for those who know. Just Rich, pay attention. If I have a fair value gap right here and another one down here, then what do you think this is? what do you think this area right here in the middle is? Between the low of this candle and the high of this candle. What do you think this is? All right, bet. Anyway, this is so fun for me. I'm not gonna lie. Oh my god, this is so fun. Like I'm like literally edging y'all with information. Like forgive me. This is like so this is so fun to me. All right. Hu- it's getting a little dark in here. Hold on, let me turn my light on. This is fun. Uh, all right. This is heck of fun. Yeah. It's an order block. Okay. It's an order block. All right. So anyway, let's keep it pushing. Um, we're still talking about ICC. Look, okay, look, bro. If you catch what I'm saying, there's an order block that you can find inside of a fair value gap that lets you know exactly what price is gonna top out inside that fair value gap. Or sometimes it depends on where it is. Sometimes the order block is right here and it's like right at 50, but right below it. But then there's a gap above it, so you know now the order block is actually liquidity, and you know that it has to get swept, and then you can take your short. Please tell me that the outro of this lecture can be me going crazy on the piano. I can do that for you way later, for sure. Um, so word. So we're still talking about the basics though. So ICC, okay. Um, word. So now, so this is ICC. Now look, this is, let's just call this big market structure shift example number one, right? Because this is not the model that Sai goes over often. Like he just started going over this, I think, recently. He has. This is not the mainstream model, is what I'm trying to say. That he blew up over, right? The mainstream model that he blew up over is different. It's right. It's here. What color did I use? So let's go ahead and shortcut this a little bit, or maybe I don't have to. It's going to be a very good comprehensive video. I'll say that. I'll say that much. Why am I drawing this out way so much? Hold on. I think I kind of. Hold on. All right. Right. So this looks familiar, right? So we all know this. This is the basic model that we've all seen. You saw now you see why I have the middle line in my boxes. Okay. So anyway, so this is the model that we all see, right? And then there's a line right here because Sai understands that, oh, below this price, like this price, at this price, buyers were in control of the market, and when we broke that price, sellers took out all the buyers here. Okay, cool. So let's just go ahead and unpack that statement. Because what is he really talking about in that statement? What he's talking about in that statement that he's not articulating is that he's identifying this word called sentiment. It's a very sort of like it's like an archaic word that people don't use anymore. Like, but sentiment, right? Because people just shortcut their way to just understanding that we're trying to talk about whether or not price is bullish or if price is bearish, right? That's what sentiment is. What is the sentiment? Are we bullish or bearish? So, with that, what even this has to get unpacked, right? Because I'm gonna be honest with you, price coming down and breaking this low is not why buyers here, this is not why sentiment is shifting. It is a part of the reason. It's just not the whole reason. Okay. So this is where I have to start giving you more information that is holy grail in nature in order for you to understand how to properly analyze this stuff without giving you like the full, without overloading you. So look, this is a bunch of, let me just make it thicker. All right. This is a bunch of candles that are bearish. This is a bunch of candles that are bullish. And this is a bunch of candles that are bearish. I'm going to be talking a little cryptic. Those who know what I'm saying will understand what I'm saying, and then those who are diligent to go and rewatch this will understand what I'm saying. But I'm going to talk just a little cryptic. Not much, just a little bit. Okay? These, like literally every word I'm saying is so purposeful. Like if you know me, you know me. These are a bunch of candles that are bullish. These are a bunch of candles that are bullish. These are a bunch of candles that are bearish. These are a bunch of candles that are overall bullish. These are a bunch of candles that are bearish. Now, in here, I'm looking at the overall picture. I could totally have a, like I could totally have I could totally have a couple green candles in here. Just a couple. I could have a, I could have a red candle right here. It doesn't matter, you know? I'm sorry, yo. This is so fun to me. Uh, so word, like, but the point is that from an overall sense, this is a bullish range or cluster or just a bullish range of candles. This is a bearish range of candles. This is a bullish range of candles and a bearish range of candles. Okay? So in other words, I could just be like, oh, that's just a bunch of green candles and a bunch of green candles. And this is a bunch of red candles. Hold on. This is a bunch of red candles right here. This is a bunch of red candles right here. I could just look at the market this way. This is how I look at the market. Okay? So I'm understanding that all of those little candles created just one big candle. I really wish that I could have like this split screen so people could see my facial reactions because I'm like really having fun doing this. I'm really having a lot of fun actually right now. Like, but anyway, okay. So this is how I look at the market, okay? A bunch of little candles created one big candle or just a range, a bullish range. A bunch of bearish candles came together to create one big candle or one big bearish range. From what you said before about entering at the break of the candle to the downside, the indication, wouldn't this situation you're showing mess that up? Exactly. So thank you for putting me back on track. I forgot I gotta keep this shit simple. Let me reverse this and put it back on the level of simplicity. I was about to dive into Holy Grail, but you just reeled me back out. Appreciate you. So anyway, um, you're right. Okay. So bullish candles. um, there's gonna be people like, no, why did they say anything? He was about to give us the sauce. It's funny. Anyway, right? And then we have a bunch of red candles, and so on and so forth. Okay. And so yeah, so you're right. In a general sense, the reason why that would mess us up is because what were we talking about? The topic of this conversation really to trade ICC the right way is all about this key word that I already wrote down. Tracking. We have to track what? We have to track our highs and lows. Okay? So, if we're tracking our highs and our lows, we have a reference point. That's a low. This is a high. This is another low. This is another high. And this is another low. And this is another high. Okay? This is a lower, no, this is a higher high. Sorry, a higher low in relation to the previous low. This is this is a higher high in relation to the previous high. This is another higher low in relation to the previous low. And this is another higher high in relation to the previous high. This is a lower low in relation to the previous low. Is it in the character of us to create a lower low if we're in an uptrend? The answer is I'm glad everyone is saying no because this is the second time I've asked this question. So if someone had the audacity to say yes, I would spaz out on you. I'm not gonna lie, I might kick you from the group. So, good. No one's getting kicked today. There's not in the relation to create a lower, like, no, okay? It is what it is. So now, price goes up to make a lower high. A lower high in relation to the previous high. And this is, in a sense, how do you say? That's required, okay? This is required for what? This is required to confirm exactly to confirm the downtrend. Okay? This is required to confirm the downtrend, guys. That's why I feel like this is so simple to the point to where it's like sometimes when I'm breaking it down, why do you need a one-on-one for me? I put like this is gonna be one of those videos that when you watch this on my channel and it's gonna end up being a 3 hour long video, you don't ask me no question until you fully understand everything that I said in this video. Because it's not hard. It's just use your head. Like I'm getting to a point to where it's like I low key find myself getting disrespectful when people when I don't know. So anyway, just okay. If if a up if I already wrote it down right. If a downtrend needs lower lows and lower highs or lower highs and lower lows, whatever. Okay, duh. You only have a lower low. For the people watching the video, you can't see. I'm like glaring at the camera right now. Like you only have a lower low, nigga. Like you need to wait for the lower high. I don't. Okay. So be patient and stop being thirsty and trying to take a trade that's not confirmed. Wait. So now price goes up and makes the lower high. From a beginner's perspective, and honestly, I would also loop in here intermediate as well, like beginner and intermediate perspective. I'm butchering this, and I don't really care. Um, intermediate, whatever. I don't care. I don't think there's an A right here. I don't care. It doesn't matter. A beginner and an intermediate perspective is that this is the low that buyers had in control for more reasons than just the fact that we made some bullish candles. I'm not going to get into that. Point is that price came down and we broke this area. Okay, we broke it right there. So now this is our indication to what? The downside. There's don't get caught up over the language, okay? We can call this an indication to the downside, a breakout to the downside, or a low being broken, or whatever it is, a break of structure, a bearish break of structure. All of these words and phrases mean the same exact thing on the chart. There's no need to overcomplicate it. Price came down, broke a low, call it and understand it, whatever you want to call it and understand it. It's the same thing. Price came down and broke a low. Okay. Now we wait for price to go back above the same exact price line. And then this is where people get stuck. I have to put in more work to teach you how to properly trade this market structure shift because this is the complicated one. And it's complicated because when the market turns over in this way, it's weak. This is not a strong reversal. ICC, the mainstream model that was out there and all that, this is teaching you how to get into a weak reversal trade. The market is so weak that that buyers need to come all the way back up to, you know, confirm if this is gonna turn over. Whereas this is so strong that the breakout alone just sent the market barreling down. This is the market structure shift that I take personally most of the time. I take this one actually less often because of my understanding that this is a weak market structure shift. It could be short lived. It could have a lot of fake outs in it. it could induce a lot of traders to take the wrong position. Okay. So this diagram is very simple, but I'm going to make a complicated one later. Which time frame? It doesn't matter. That's the point. Time frames don't matter. How do you differentiate between the first and the second shift? Go back and watch the video. So to continue, price goes up. Okay, hold on. Let me not be. My bad. My apologies. Okay. The way that you differentiate between the first and the second shift, shift number one equals, let's just say price going from higher highs and higher lows and higher highs to lower high. No, wait, higher high. No, wait. Okay, no. Goes to lower high first and then goes to lower low. Shift number two is like price goes from making higher highs, higher lows to another higher high, but then price makes a lower low first, then makes the lower high. And what I'm arguing is that this one is weaker, and this one is stronger. And so what delineates or separates the shift is the fact that we got that this came first, but then over here, this came first. So really, what are we focused on? Yes, lower, lower, but a lower what? This one was a lower high. This one was a lower low. So this came first over here, this came first, and then this over here came second, and this came second. Just asking, you mentioned that a candle closed below the line as confirmation. Taking the trade, but in this case, it's looking like the same, except price pulls back. That's the thing, it's not the same. Yeah, so it's not the same. So after I finish going through this example, I'm gonna draw them side by side for you and show you the difference. Okay. Um, but so anyway, price makes a lower low, it has to come up and make the lower high. And then the way that it's traditionally taught is that you wait for price to close below the same price line. You wait for price to close below the same price line that we already closed below before. So history repeats itself, and then you would anticipate that price can sell down to at least this TP, and then hope or have some faith that price is going to continue to run. I teach you not to have any more hope. I teach you to know exactly where this is going to go down to, because we knew where the corrections are going to end. And that's the Holy Grail. Just like how we knew where this correction was going to end. And that's all I'll say about that, right? So anyway, when we have the market structure shifting, let me go ahead and draw you the both examples, okay? So we'll have a starting low and high. Then this is going to be the strong model. And this is typically like the type of reaction you have, where price gives you a lower high first that ultimately leads to a break of this low. in the market right here, even creating a fair value gap in the process. And that you should be entering into your trade as soon as we get a candle that closes below. You should be entering here. Because this is it's the lower low. Because this right here was a higher low. All right. The other example is, and this is the traditional one, where we have a reference high and low, and then price does this. And okay. So now, because we're doing what we ought to do and we're tracking our highs and our lows, we see that this is a higher low, that this is a higher high, but now price has come down and give us a lower low first in the market. This does not prove that we're bearish. This does not shift sentiment because it's not confirmed. The only thing that shifts the sentiment is locking in a lower high and then proving we can close back below. Because sometimes the market can just, you know, like sometimes the market can just fake people out, and then now we're going up. Why? Because you didn't wait for the confirmation. And then what trade did you just take? You you're being subject to manipulation, right? You just got if you ever hear this word, you just got induced, which is equivalent to like you just got your ankles broken, my boy. That's what happened to you. You're playing basketball and you just got shook and your ankles got broken. They just broke you. You just went. You just exactly, yeah. Your ankles got broken. The market juked you. Okay. Don't do that. Don't don't do that. Don't do that to yourself. Okay. So how do you work on that? You gotta get your defense game up. How do you get your defense game up? You track your highs and your lows, like how Romel's telling you to do so. Okay. So now I see, and this is why I don't trade this model that much, because there's so much work that has to go into it. Because this is the hard one. I'm gonna be honest. The other one is simple. The other one is so straightforward and simple. Lower high, break, sell. Simple. There's it's hard to get faked out on that. This one, like, there's a whole nother diagram I need to make. Okay. Because here's the thing, I'm not telling you anything you don't know yet, but I'm building it up. I still haven't told you fully how to trade ICC the right way, so I'm trying to get there. I'm just trying to do it comprehensively, all right? So we have the lower high in the market, and then you have to wait until you get a candle close that closes below this low that was in the market, and then you can, take that to the downside to at least this area, and then hope that it continues. With your stop loss here, this is your TP number one, where you need to take profits because the market could just go right back up. And then so anyway, this is market structure. This is shift number one over here. This is shift one. No, I'm sorry. This is shift in my opinion. Because that's what I call it. Shift number one to me is the better shift. So this is shift number two. Then this is like size mainstream. And I say mainstream because Sai also trades this. And I know he has videos talking about this now. But this is his mainstream model. Like the mainstream understanding of it of market structure that he blew up for, right? I'm not trying to limit the dude. This is shift number one, and this is Romel's preferred shift. All right. How are we feeling? Are we good so far? We're 1 hour in. You see who's all in here. Okay. Cool. All right. So now we need to unpack because shift number two is so more it's complicated. This is the simple diagram. It's way more complicated than this. This is where me and Sai start to differ, or not. I don't think we differ. I mean, well, he doesn't do what I do here. Um, Maybe he does it more subconsciously, but it's not like out there. But this is where we start to diverge more because this is way more complicated than this. Okay, so let me go and try to draw a complicated diagram. Okay, um, I have some space right here because I'm gonna delete all of this anyway. All right. Yeah, exactly. Prado, perfect example. This is an example of the shift that I like, right? You have price going up and it makes your overall highs, lows, and you know, okay, so the way I'm looking at this is more of like this is a higher low, higher high, or higher high, higher low, price makes up overall higher high, overall higher low, but then price makes a lower high up here and from a major perspective. So the way my mind's looking at it is like it goes up here, makes this high, makes this low. All of this is the overall higher high, the wick, all of it. Higher high, higher low, because it's higher than this one. And then we get a lower high, and then the market breaks this low. Now, this is what is this a 1 minute chart or a 1 hour chart? I think there's a 1 minute chart. It looks like a 1 minute chart. It's a 1 minute chart. All right. So price comes down and it breaks that low. If you would have known what you're looking at, you should have been entering when this was happening. If you couldn't, okay, no worries. Understand that because this is a very strong shift, the market just comes back to pick up where it left off. It came back to it came back to ultimately get into the market and continue the downtrend where the downtrend started. And that's what we see happening here. And look at how strong price trended for the rest of the day. This is the best structure or the best shifts in my opinion, right? could have taken. I like how he has this area marked up though, because this is he's looking at internal market structure. So price made a lower low internally, then this is the overall lower high. Okay, now I understand what you're looking at. And then yeah, you could have took that. Oh yeah, yeah, boom, you could sell right there because now that's indication, correction, continuation. Here you have size model inside of a bigger model. It's and this is what I was about to start getting at because it gets complicated. That was easy, but it was also complex because the market is not simple, right? It's not as simple as the diagrams that I'm drawing, but at the same time, it is. I'm just trying to give you the concept first. So let me try to draw a complex model real quick. Hold on. Wow, why did all that just pop back up? All right. So we're gonna have a starting point, and I'm gonna draw. I gotta draw this more big. So all right. So complex model time. Okay. We're gonna take. We're gonna go. We're gonna go from simple to why knowing more than what price line to mark out is necessary. Okay. So I'm trying to think. Okay. So this is the simple version, right? You have a price line. We break below it. You correct above it. I don't know where I'll upload it, but you'll know because I'll let you know. And then price comes down and it continues. Can we agree that this is very simple? That this is ICC? I just want to make sure that we're all here. Okay. All right. So because of that, here's how this thing gets a little bit more complex, okay? Everyone doesn't have an issue at spotting an indication. Where everyone gets screwed up as an ICC trader is waiting for this correction phase to be over. Because here's what'll happen. Price will start to correct. Okay. And this is what happens. They hear Sai say, um, wait for a candle to come back and close below the price level where we have our indication at, right? Um, and so then what ends up happening is people are trying to take shorts here, okay? And you're trying to get into a sell. And then the market goes against you. Is this what happens to most of y'all? Okay. I'm about to completely fix that issue for you right now. I'm about to fix all of that. Here's how we do it. Pay attention. You got to understand that there's something called internal structure. Or price action, okay? The purpose of this is to help us with entries. Like, why do we need to analyze this? Like, why analyze, right? Why do analysis? It's to help, this is a big word, help time our entry. That's what we have to do. So now, and please don't piss me off, y'all. Please don't piss me off. Otherwise, I'm gonna stop live streaming right now, okay? And if you think you're gonna piss me off, don't type. Looking at this yellow trend, I'm being very specific with my words. Looking at this yellow trend that is inside this range, this bullish range. Anyway, is price only making is price making higher highs and higher lows, or like at any point did we make a lower high or a lower low? That's what I'm saying. And inside this push to the upside. Okay. Are you sure? Someone said, I see what you're saying. It's already starting to click. So, how can we expect to sell if we never made bearish market structure? If we never made a downtrend? Oh, well, Romel, doesn't the higher time frame override the lower time frame? We broke this low, so this is the major time frame, and so woo, we broke it again. Wouldn't that override it? That's that like that that's not a bad question, but the people who be like about it, that's where I start to get pissed off because I'm like, like, come on, let's think about this, okay? What is a higher time frame? A higher time frame is the expression of a bunch of low time frame price action. That's what PA stands for, okay? The expression of a bunch of low time frame price action is your higher time frame. There is there is no low time frames lead to higher time frames. There would be no higher time frame without low time frames. Therefore, if the low time frame does not support, here, I'll just leave this on my chart. It's fine. I already drew it. So, what did I say? Without low time frame. If the low time frame does not support the higher time frame play, there is no high time frame play. Now that should be the most common sense thing in the world, and it'd be like, okay, maybe not, but it makes sense to me so much to the point to where I get really vexed when I'm having a debate about this, bro. There is no there is no 1 hour candle without 60 1 minute candles. Okay, there is no human body without a bunch of organs, a bunch of different organs. There's no organs without tissues, different types of tissues. There's no tissue without cells. Think about biology. Now there's no cell without the organelles. Do you remember that? Hey, what's the powerhouse of the cell? The mitochondria. That's one organelle inside of a cell, and there's however many billions or trillions of them that make up your one body, and that many more that make up people. Okay, you got the mitochondria, the endomass, the endo whatever something like reticulum. You got the nucleus, and you got so many other little structures inside of a cell, right? Then you break that down and you have complex atomic structures, proteins, amino acids. The you know what I'm saying? The proteins, the building blocks of proteins, the amino acids. And you break that down some more and you get yourself all the way down to molecules. Then you break that down and you get yourself down to atoms. You get to the atomic level, which is the basic building block of all things. So now, if there was no atoms, how would there be a person? If there was no atoms, how would there be a piano for me to bang on? If there was no atoms, you see what I'm saying? There is no life without an atom. There has to be a basic structure of something, right? And then, I mean, I didn't even really expand my mind this far. There's different types of atoms, so the elements can change, but I ain't even gonna go there. That's crazy. So the point is, when we're looking at this chart and we're breaking this market structure down, guess what? Here's the mystery, okay? At some point in time, there is going to be, and this is Holy Grail talk, but at some point in time, there's gonna be a 1 minute candle that the low of that 1 minute candle is gonna be equal to the low of the 5 minute candle and 15 minute candle and 1 hour, 4 hour. Oh, guess what? 6 hour, you ain't never heard of that, huh? 11 hour, you never heard of that, huh? You never heard of these time frames, right? The 2 day chart, you never heard of that, right? The 12 month, which is the yearly, the 40, the 90 minute cycles. See, so now, what am I saying? How important are time frames really when I can just change them? Do which time frame, Romeo? Whichever one where this one equals all of these. That time frame. Okay? I don't mean to break your mind right now because I am trying to just keep it simple, but you can do this on any time frame. And that's the truth. If you know how to do it. A lot of people don't know how to do it, so then this is what we do. You don't take a sell if you don't have a low time frame downtrend. That's it. So now let's just say this big white line is our 1 hour chart. And so then this is going to be our 5 minute chart. And we don't have a 5 minute downtrend. So then therefore our low time frame internal structure cannot support the higher time frame narrative until it does what? Until it actually starts to create a downtrend. Okay? And where does that happen? Price makes a uh, a lower high and a lower low. Wait, I'm so tripping. Hold on, my bad. Price makes a lower low and then a lower high. Internally, inside the overall idea, until we get a low time frame trend that supports the direction of our higher time frame bias, we can't take a trade. So everyone, what they're doing is they're entering prematurely because Sai teaches you how to enter at the right price. But there hasn't been enough teaching on how to get you to entering at the right time. Which leads me back full circle to telling you that what is the point of tracking our highs and our lows? And it is to get you into the trades at the right time. The goal is to enter trades with confirmed trends and as well as enter when they confirm. So let's go back to this. So in this diagram, everything's chill and peachy. You don't have to put in as much work as we're putting in right now. Price breaks, boom, sell. Perfect. Here we got to put in more work. So now when is the right time to enter? When we had this locked in, this confirmation of the overall higher time frame narrative, and this area, just in a general sense, was the right, quote unquote, the right price, because what is right and what is wrong. But we're not going to get into that. So anyway, this is a better timed entry for you to get into your trade. And I could draw this and say, oh yeah, duh, that makes sense, Romel. You're not telling me nothing I already knew. Well, then why do you keep screwing up? The reason why you keep screwing up is because this is what you see. What you see on a chart is just this. You see price coming up, down, up, down, and then you're gonna see price do this, and then here's here's what you'll do. So now price went up above our indication. Then it looks like price made a lower high, which it did. I drew it this way up for a reason. Price made our lower high. Then price made our lower low. It even made another lower high and another lower low. Oh man, we're totally in a downtrend now, guys. We're gonna take this sell all the way down. So then what do? You enter. You're entering anywhere in this area. And oh, and everything Romel taught me just lined up as well. Like we're in a downtrend, we're coming back below this area. Oh wait, why did it go up? Damn. Not only did Sai lie to me, but Romel lied to me too. Go back and watch the video. But nah, I haven't addressed it in this video yet. So now let's start talking about some extra information, okay? The reason why price didn't sell in the way that I drew this is because buyers didn't take out an area. No, sellers right here did not take out an area that buyers had in control. This is why I was saying that it's more complicated than just, oh, sellers took out an area that buyers had in control. No. Wait, no, in this diagram, right? If you can recall, I said this early in the video. It's not that simple. Price coming down and taking out an area, or taking out a low, that's not valid. It needs to be a low that buyers had in control. What determines if the buyers had it in control or not? The what determines that is the fact that sellers had the market in control here and buyers broke above it. That's what makes this particular break right down here so important, because we broke a low that buyers had in control because they proved that they can take sellers out of the market. It's a little deeper than that. So what people do is they come to the chart and they start trying to apply ICC, but they don't know, first of all, how to track their highs and lows, nor do they know how to put the proper weight on the higher highs and higher lows that are important. This low that I drew right here is important. Why? And let me make it bullish or green, right? This low right here is important. Why? Because it took out a high in the market, meaning that sellers existed here, and then buyers existed here, and price could have sold back off if sellers were in control, but they weren't. Buyers broke above an area that they had in control. So that's what makes this low important. Now, here's the revelation. This is internal versus external market structure. This is external in a way, okay? This is external. Did we ever break below that low? The answer is no, we did not. So even though we made, and this is how crazy price action can get, even though we made an internal downtrend that came and confirmed our play on a higher time frame, it still wasn't the right time to execute because even the lower time frame didn't line up. So now this is where my mind starts to come into play. How do I analyze this? Take the noise out mentally. Make everything a range. This is nothing more than one big green candle. This is nothing more than one big red candle. And guess what this downtrend is? Nothing more than just one big red candle. And guess what this uptrend is? Nothing more than just one big green candle. So now what does the market look like? It looks like price is still doing what? Uptrending. Because it is. It's still making higher highs, higher lows, higher highs, higher lows, higher highs. And there were no important levels that were broken yet. And this is why I love noise. A lot of people don't know how to read noise because they don't know this. They don't know how to filter it out mentally. So that's why everyone is like, oh, what time frame do I go on? Oh, this is why I like the 4-hour chart. When in reality, if you put a line on your 4-hour high, that same line, you'll be able to see it on the 15-minute chart, on the 1-minute chart. The prices don't change, my boy. The prices stay the same. So then therefore, does time really matter? Or do you just really need to know what the fuck do you really just need to know what you're looking at? You don't know what you're looking at. That's the issue. So if you looked at the right things, then you get to a point to where, oh, I can mark out my low time frame chart and I'll still have the same exact prices that I would have if I marked out my high time frame chart. Because you understand market structure. It's time frames don't matter. So anyway, this is how we look at this, right? Or at least me. Price is still uptrending. So let's talk about all of this extra stuff down here. When price broke this low, right here, did price break anything? Did price break a low that buyers had in control? No. What were buyers able to accomplish here? A low was made. Lows are lows are made to break highs. Highs are made to break lows. If you have a low in the market that didn't lead to a break of a high, it's equivalent to just a waste of oxygen. Like, why were you born? you're doing absolutely nothing significant with your life. You know what I'm saying? Like you could do us a favor and die. Now, granted, that's not how I really think, okay? But I'm just saying I had a toxic upbringing and whatever. That's the analogies that I have in my life. I like that's what I think about when I'm and looking at the market for myself. I tell a story. I tell a story to myself. This child was born, this low was made, didn't do anything great. What like I know you're not supposed to compare your kids, but it's like why can't you be like this low that did something with his life? You know what I'm saying? Like why can't you? You know what I'm saying? So that's what it is. So lows are made to break highs. Highs are made to break lows. If that interaction's not happening, then what does that mean? These highs and lows are not important. Okay? So this low was made and it went up and it had one job and it didn't do it. It's supposed to break this high, therefore it's not important. So what do we do with things in our life that are not important? We ignore them. Exactly. You see, we said it at the same time when you typed it, and I said it, and then it was like synchronicity. We ignore things that are not important. So, same thing with this one. What did this low do? Not jack shit. Ignore it. What did this low do? This low actually went up to break some highs. This is actually the lowest low of this whole move that broke this high. So guess what? The only low in this area, the only low in this area that did something significant with its life is this one right here. Because it led to a break of this high, but it's also the lowest low. And I'm giving you another key right now that I'm going to talk about later. The lowest low of this trend, because that's what it is. It's a lower high, lower low, lower high, lower low. So the lowest low of trend on a low time frame led to this break of this high and all of these highs. All right. So this is how you stop yourself from getting faked out. You have to understand not only how to track your price action, but how to put weight on lows and highs and how to remove weight from lows and highs because you keep trying to trade them all like they have equal weight. And an unfortunate reality in this world is people are not created equal. Some people are more important than others, and it is what it is. Go cry about it. Some men are meant to be kings. Some men are meant to scrub the floors and be janitors. Go cry about it. It's the world. It's the way it works. You can be a king in your own right. You're always going to be the king of your household and the king of your family and the king of whatever domain that you're gonna have. And I'm gonna be the king of my domain. This is my arena. This is what I do. I'm at the top of the not the very 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 top of the food chain, but I'm up there. Like I'm near the top of this food chain, and it is what it is. Why? Because I wanted to be, and I just knew I was, and I told myself I would be. So I became what I am what I am. I don't know how else to explain that. My name literally means uh basically a person who can counsel kings. So I have to be a king in my own right if other kings should come to me for information and for advice, right? It's not my fault that I know I'm royalty. Don't get offended. You just need to remember who you are and do what you need to do. So anyway, um, But that's the reality of it, right? Not everything is created equal. It is what it is. So all of these highs and lows in the market, guess what? They just reflect life. They just reflect life. I built the perspective and the that I have off how the truth that holds the world together. Because there has to be a truth that is always true at all times, otherwise the world would just completely fall apart. That's just the truth of the matter. It can't be like, oh, I'm gonna only be true during the daytime. Like what? The world would fall apart. There's a lot of other little ideas and different perspectives built on top of the truth, but no, it's not the truth. Those are norms. I'll go ahead and be controversial. Being gay, that's not the truth. And if you get offended, bye, don't care. I'm gonna live and I'm gonna let you live. You can go be gay if you want to. That don't matter to me. But it's not the truth. That's not how the world was made. Babies can't come into the world that way. It is what it is. So it is. It really is what it is. So all because you have a couple people that be like, hey, being gay is okay, and then they try to get 51% of the population, which is technically most people, to call it true, does not make it the truth. I'm sorry, it is what it is. Instead, that makes that a social norm. And that's all that is a social norm. It's not true. Do all cars have four doors? Yes or no? But most do. Doesn't matter if most cars do, it's still not the truth. It is what it is. I can't get canceled for I can't get canceled. It's impossible for me to get canceled. How are they gonna cancel me? So anyway, this is the truth about the chart. So this is the truth about trading. And if you want to find the truth, you find the truth in life, and it's just all synonymous. So the truth is that these lows don't mean anything. They didn't do anything significant with their lives. Okay? And it didn't break any lows that had any real value. So it wasn't until price started to come over here, and now we're not only breaking the main price line in question and breaking structure that's important and getting a lower high in the market all at the same time. I mean, come on now. Like that's where we enter and the market just goes down. Okay? So, at this point, at an hour and 49 minutes, you now know how to trade ICC the right way. But you see how complicated this structural shift is compared to just this one? Just wait until we get the lower high, break, enter. This one's easy. That's why I trade this one. This one, I understand it, but it can get very murky and complex because now, what if the market's choppy? The market is the market can keep doing this same dynamic that I just drew, and it can keep faking you out, but next thing you know, like the market is just constantly like chopping around and it's going all the way back up to here while it's inducing you to take shorts the whole time, and then finally it falls and the whole trade is still valid. So being able to track your ranges is important. And I put emphasis on the word ranges because that's going to be the next step. And that's where you start to dive into the Holy Grail. But I even showed you, right? So what is a range? All of these little areas are ranges, right? So that's a bullish range, that's a bullish range. This is a bullish range right here. This is another bullish range right here. All of these are little ranges, okay? As well as these. These are bearish ranges, bearish ranges, bearish ranges, bearish ranges, bearish ranges, bearish ranges, okay? But now guess what? How do you trade noise? How do you block out noise on the market? Watch this. This is just one big range, okay? This is just one big range. And then this is one big range. Now all of a sudden, look at what we have here. Doesn't this look so much easier? Doesn't this look way tradable, way more tradable? Cool. When you watch this video all the way through, go back and re-watch, I would say, my most popular videos on my channel. You shouldn't ever need anything else. And practice. See, you could say easily spotted head and shoulders, but I don't even go that far because head and shoulder patterns can fail. Because, I mean, that's what this traditional setup is. Dang, I ran out of room. File, save as, what am I gonna call this? Wick Sauce Wednesday. And what's today's date? 9.10. All right. So let me file, open, blank. I don't even know what I was about to say. Um, what he said, wait, Romel, why does it sound like you're done? Because this is the conclusion of this section of teaching and education, right? You wanted to know ICC and how to trade ICC the right way. That's it. But I'm gonna conclude it a little bit more. Just give me a second. Um, I forget what I was about to say, but ranges. Uh, so I don't even know what I was about to say. Sorry. But anyway, so that's all you need to be profitable, right? Now, if this is fine and dandy, okay. You said it was about pattern. Oh, patterns failing. You're right. That's all that ICC is, or I mean, well, not all ICC is, but like this right here is literally a head and shoulders pattern. So congratulations, Sai taught you how to trade a head and shoulders pattern properly. That's the head, shoulder, shoulder, neckline. Some people draw their necklines like that. He taught you to do it like this. He said this was an indication. He called this a correction, and then he called this your continuation here. So you would enter right there and take price to the downside. Great. Now, yeah, the trends can continue and price can repeat this pattern over and over to where you have your initial indication continuation, your initial indication um, correction phase and then continuation, and then it can repeat again, where you have a fresh indication correction phase and another continuation entry, right? And so on and so forth. So now this is why Psi is so popular, because it's that easy and all you have to do is draw a line. The thing is I just showed you how complicated it could be if you don't know what line to draw. Because this is the big picture. This is the big picture, but there's gonna be a bunch of little stuff that happens inside that is important. Now, can people say, "Oh, Romel, that stuff doesn't matter"? Sure, absolutely, you totally can, and I'm not mad at that, because if you know what price line to mark out, then it doesn't matter. If you can get yourself fast tracked to the point to where, okay, bet I know how to quickly identify this, this, and this, and I'm not gonna get faked out by any of this or any of this nasty price action to get into a premature entry. And you know, like, if you just understand this stuff and you know to execute there and to execute there and to execute here, then yeah, it doesn't matter. Okay. So, but where, like, it's a head and shoulders pattern. Whoop-de-doo. Who's ready to learn something that's actually a little bit more important? No, let me chill. Who's who's ready to learn? Who's ready to learn? I'm gonna be honest. Leave right now if you don't want to get confused. Actually, you know what? I'm gonna go ahead and just table it here, and I'll talk about that later. I'll talk about that next week. I'll talk about that next week. I'm gonna talk about that next week. I'll go over it next week, but I can't. I can't go over it right now. It's public. I honestly wasn't even trying to juke y'all, because I was actually genuinely like teaching y'all little snippets of I was giving y'all clues. There's clues littered in this whole entire video, right? There's clues littered in this whole video. So they're there. But that's all I really can give y'all as a clue. I can't just like put the puzzle together for you, so I can't do that right now. I'll do that next week, and I'll do it for my VIP members. So word. So do you guys have any thoughts, comments, questions? Probably a chart would be helpful, right? Let's go to a chart. All right. I mean, there's a lot of different examples. Let me just find a simple one. Um,
I have a question.
you got a question?
I'm gonna type in the chat.
Um, yeah, could you go over when it's time to apply? I didn't even go over wick sauce. I just this week I just applied. I just went over. All I did was go over ICC because it's the precursor. You got to know how to track your highs and lows and apply it in a basic sense in order to know why wick sauce is even a thing, and to know why. Like I didn't factor supply and demand into this equation yet, you know? And supply and demand is probably the closest thing to the holy grail of trading. I studied economics in college. Supply and demand is what determines what price. Supply and demand is what determines what the price of something is going to be. What we do know how to do now is understand exactly where that demand entered into the market. I can't talk more about this right now. So word. So everything that I said today is gonna go on YouTube and I'll upload it, and then I'll say at everybody go watch video. Okay. Um, but let's just go over the chart from a basic ICC perspective. Okay. I'm trying to find something that's easy to analyze and easy to look at because there was a lot of choppiness in the market. I'm trying to think, bro. I did a really good example somewhere, and I'm trying to. Oh, it was on Solana. Ah, I got Holy Grail price action all up in here. Hold on, give me a second. Okay, I can do this. Um, this is all right. It's ICC, but it'll be a precursor into next week. Ah, dang, no, I can't. ES, MES. I need to look at something. Okay, how about this? Someone just give me a pair to look at. I'll do it that way. Make it easy, and then I'll find it.
Euro USD 1 hour.
Euro USD. Is that everyone's saying gold, gold, gold? Every, all right, gold. Damn. He said, all right. So this is a big trade, right? Okay. I'm gonna show you how we can do this all on one time frame. All right. So this is step one. We want to look for the lowest lows and the highest highs. of trends, okay? Because what we want to see is we want to see how the trends are trending. So we don't need everything. This is the high of a trend. This is the low of a trend. Fair enough? Not gonna lie, I can see Romel taking a stroll on the road, and I'm gonna zip him and cage him until he damn. Maybe, maybe, maybe I won't. You know. Yo, Blue. Wait, is Blue here? Blue. You can see the Holy Grail right here if you already if you know what you're looking for. You see, yeah. But anyway, so anyway, price came down, then price went up, came down, went up. Cool. But so now, what do we want to understand? How did we get from here down to here and all the way up to here? Like these are our external, our major areas of market structure. Okay, like that's what this is level sort of like this is the big level. So now under this, and this is tedious, but this helps you learn until you can do this without having to do this. Okay. The next level is how do we get from here to here? You mark it out. And you ignore anything that's not important. So price created a high. This was the first set of internal market structure. This is the first low. Then we made the first lower high that led to the break of this low that triggered the downtrend. We made this low, but am I going to mark it out? Hell nah. Why? Because this low didn't lead to anything significant. It didn't lead to a break of, didn't even lead to the break of a high of a candle. So I'm gonna ignore it. And we went down to here. Now I'm gonna mark this high out. Well, Romel, why are you marking that high out? It didn't lead to the break of anything. It did lead to the break of a high of these little tiny areas in here. These are technically lower highs, these bullish candles. It led to the break of it made consecutive bullish candles here. This candle closed, like all of this is still valid. This is a lower high in the market. Then price made all of this. Am I gonna mark any of this out? No, it's noise. These lows did not lead to a break of this high right here. And then, but this high though did lead to a break of that low. I could mark it out, but that would be doing too much. Price came down, made another low. Then price made a double bottom after it made this lower high, and then we started to make a higher high. This is an uptrend. It's a short-lived one, so I'm gonna mark it out though. Then price made a lower high, came down, broke this low, mark that one out. And then we're gonna go all the way up to here, then all the way down to here, then up to here, then down to here, then up to here, here, and so on and so forth. All of this is internal price action that explains that all we did was uptrend. High, higher low, higher high, higher low, higher high, equal low, another higher high, higher lows ish, then lower high. So we just went all the way up to there, and so on and so forth. So now this is the next stage down. This is me marking out my price action. Right? So I'm tracking my highs and my lows like an all-star. I'm filtering what is important from what is not important. What I'm trying to do It's basically this in a way, right? Like what this indicator helps you do, but I'm doing it as a human being. And I would trust myself to do it better than the indicator. So, anyway, cool. So, now what is the next step of this? We need to figure out the next layer down. This is the 1 hour chart. Let's go look at what we have marked out so far. Well, no, actually, nope, never mind. I forgot. I'm showing you how to do this all on one time frame to show you time frames don't matter. So then price comes from here. We consolidate, but in a general sense, we make an overall sort of higher low area, right? Price is just bouncing like, man, I was about to be very vulgar. It's it's just here, okay? Then price make a lower high, comes off and sells off. It is what it is. Keeps selling off. All of this stuff is downtrendy. This high is a lower high. This high is a lower high. This high is a lower high. This all of this stuff is still lower. It didn't break any of these previous highs. It's noise, but all of this stuff is still lower. There's no bullish price action yet. All of this is just noise, like, and we come down to here, and then we start to make some higher lows, and then we uptrend our way to here. And then here we start a downtrend. How do we know? Because we broke some lows that led to this high. So sellers took control. Where? Here. Because this candle came down and broke this low. They took control, made a lower high, lower low, lower high, lower low. Overall, lower high, where they took control at, hint, hint, Holy Grail, and brought the market down even further. Okay? Or actually, I'll just put it like that. Key mystery is this is where we start to do the analysis. This is a bullish range. I don't know why I'm showing this. This is a bullish range, okay, that buyers had in control. Why? Because they were able to break above a high that led to the break of a low. Or actually, we could just ignore that. This is a bullish range that got broken by sellers. We can just say that. We had an indication to the downside. Great. So then price broke. Boom. And then all we're trying to do is figure out, where did this start? Well, we can track it. We had a high, low, lower high, lower low. So then we know that between this low and this high is where the downtrend triggered. And if you go back to my diagrams where I say sometimes you get really clean support and resistance, if these were the lows that were broken, like this was the higher low that was broken and the confirmation was given, the downtrend triggered and initiated here in this range. So then what do you think happens? Price picks up where it left off. Now you can snipe the high of the market. Congratulations, Holy Grail has been presented. Anyway, going back to regular ICC, how did the market structure turn over here? We got a higher low first in an overall sense. And then we came and broke this high, which was a lower high in the market. That was a lower high. This is a lower high, lower high. All these are lower highs because we're in a downtrend, right? And I'm sorry if y'all typing. I'm not even reading the chat for real. And all these are lower lows. lower lows, and the lowest of lows. Okay, so we're in a downtrend, making lower lows, lower highs, lower lows, lower highs. But is it in the nature of a downtrend to make a higher low? No. What do you think we do right here? Buy it. Because now, so now here's the thing: are you gonna wait for a 1 minute? Are you gonna wait for a 1 hour candle close? No, because then you would be buying it all the way up here. That's dumb. Even internally before we got there, and this is why I like the 1 hour chart. So now let's do everything on one time frame. How did we break this? Well, we came down and made this low, lower high, lower lows, more lower highs, overall lower low. Then we made a higher high, boom. Then we made a higher low. Now we have the ICC that already triggered where? Here. In some ways, shapes and forms on lower time frames. We have your indications, your corrections, your higher lows. So this is your major higher low. But then this is a really minor one, or an internal higher low. And then we broke and closed. You could have been in down here. If this is confusing, if we're on the 1 hour chart, you drop down to the 5 minute. It's the aligned time frame. Now everything makes sense. Right? What I'm trying to do is show you that it doesn't really matter what time frame you're on. You're gonna know what prices to mark out if you just stick to not necessarily the rules, but the rules, you know? So now this is an overall higher low in market structure. But guess what? Even on this 5 minute chart, we had to downtrend in order to get there. So now this is where that inception comes from. And this is where noise kicks into the market. Okay? This is what people are sort of incapable of figuring out on their own. That there are ranges inside of ranges inside of ranges. There are trends inside of trends inside of trends. It's a big cluster freaking matrix of price action that has to be tracked well. Okay? And so, word. Once you know how to track it well, then you see how the 5 minute chart, like here, like how low do I have to take this to prove my points here? Watch this. I'm on a 1 minute here. 1 minute uptrend got confirmed here. This was the lowest low. Price made a technical higher low, equal high. But even if all this doesn't matter, then we have more higher lows to make more overall higher lows, to make more higher highs and higher lows until we manifest this higher time frame play. So now this big 1 hour time frame play, this indication, quote unquote, I'll put it like this. What? All indications have low time frame or have confirmed low time frame trends. Do you really think that price is just gonna break out of a high or a major low in the market without confirming a trend in the process? Do you think do you think do you think the market is that random? No. It's not that random. The market just doesn't just, oh, I'm gonna just break a major low in the market. Like, no, there's gonna be a reason for it. Oh, I'm just gonna casually go and break a high in the market. Like, no, there was a whole ass uptrend that was confirmed that you just failed to see. So all you gotta do is just track your trends right. It doesn't matter the time frame you're on. Track them, and you're gonna enter at the right time. Okay. So here there was already a 1 minute time frame trend and a 5 minute time frame uptrend well before we even got this breakout of this high that news led to us doing, right? And then now here, so let's just say you missed it. Let's just say you're like, damn it, for some reason you didn't take the breakout of this high. You had a nice 1 minute candle close, and you missed it. You missed a 5 minute candle close, and you didn't get in on any of this price action. All right, bet. Well, let's go back to the 1 hour chart and let's see how did we turn over. However we turned over is going to tell us what we can expect to happen. Price made a higher low first, which led to a really strong breakout. I mean, look at how strong, look at how long it took for price to even think about coming back. And then guess what happens when it does? It simply just comes right back to where the trend got confirmed. Where did the trend get confirmed? As far as this major price action is concerned, it got confirmed right here, yo. It got confirmed at the high that we broke. Why? Because it's where the market structure turned over. So now you could have just, but everyone is glazing sigh. That's cool. That's cool. I ain't mad at it because I wouldn't know price action if I never met Sai. I'm gonna be honest with you. I used to be a momentum based trader, but I also had 7 years of experience before I met Sai. So boom. Now does Sai know how to do this? It's not hard. All you got to do is sit down and watch my video or watch a video, and boom. Now Sai can be taking better entries. But you can do it, and I think you should do it because we don't have wiggle room. It like Sai has money, right? So he's not gonna concern himself with like precision. What's the point? Let me just get in and be on the right side of the market and make my money because I have money to actually have a stop loss. Well, okay, a lot of us don't. We have smaller accounts. We got 200, 300, 400, $500 accounts, $1,000 accounts. If we risk $200, we're risking 20% of our capital. But guess what? If Sai got $20 million in his account, he can risk 50K. And that is, I think, what, a quarter of a percent? That's 0.25% risk. He's just on a different level. So he, accuracy and precision doesn't concern him. As long as he's right overall, he's cool. Do you think Sai does some of the things you teach unconsciously? Yes. I think it's impossible for him to have had the time on the charts and the experiences that he has and not know how to do some of these things subconsciously in his head. There's just a little bit of a delay as time goes on with him like revealing and articulating his internal thought processes that he's going through in the moment that he's entering in his trades. And he does a good job, but then also too, sometimes you can only speak to what you've understand as deeply as you understand it. So, but yeah, risk management and um, patience goes a long way, and being on the right side of the market, right? Now let's just say, okay, you missed this entry. How do you get into this uptrend? It's simple. Price broke this high that sellers had in control. Why? Because it broke lows that buyers had in control. Why? Because those buyers broke highs that sellers had in control. So now you see how to mark out the right highs and lows. Let me go ahead and clear this up. Do you see why we marked out the highs and lows that we did? How come I didn't mark out this one right here that I'm drawing a rectangle on? Right here. Like, how come I didn't put a line here and say, oh, because price broke this level? Because this low didn't lead to a break of the high. It led to a lower high. This low didn't lead to a bullish sentiment being born. So in my mind, yes, it's useful, but I can also ignore it for real. This is not important, but someone thinks it is. And then, oh my gosh, like, don't tell me like you still do this and you mark your lows out like how Sai used to teach you a long time ago. I don't know if he still does or not. And so now you think this is a bearish indication. This is a correction. And now guess what? You're entering into this trade right here, into this short. And it goes instantly against you. And then you'll be like, oh, dang, well, okay, whatever. And then you'd be like, oh, well, maybe I was just too early. Price never closed above the high. We made a lower high. Now we're coming down and breaking this area. Bet it's really going to go down this time. So then you enter again. And then you see it actually start to break. And then out of greed, because you lost a trade, oh, it's going down, it's going down. We're going to hit TP and we're going to break these lows. And then you're like adding more positions. And then you just get taken all the way out the market. And these are very real scenarios that you guys experience because you simply don't know what you don't know. Okay? And so, first of all, this is where I used to get pissed off as a teacher a long time ago. We're supposed to be tracking our highs and our lows, right? Like that's all we're doing. We track highs and lows and the closing price in relation to those highs and lows. So, if this is what we're supposed to be doing, what did I just mark right here? What is this? What am I identifying? This is not a low in the market. This is not a low. But Sa used to say this is a low because, and I can understand where he got it from. He's like, this is the lowest price that buyers and sellers agreed on. So, but no, you're overcomplicating it. This is the closing price of this candle and the opening price of this candle. We are not objectively tracking our highs and lows at all. This is the low. It's literally the low of the candlestick. Is it not gonna? All right, whatever. Point is, this is the low. Like the wick, this is the lower price now. I don't like. Okay, here, this one. Open image in new tab. Is this one gonna load? There we go. The low, regardless of if it's a bullish candle or a bearish candle, is the wick. So this is another question that would irritate me. Oh, Romel, do you mark your lows out at the bodies or at the wicks? This is like one of those questions where I'm just gonna stare at you and I'm gonna say you didn't do enough research on your own to find the answer. This is a very easy multiple choice question type of answer. The low, regardless of if it's bullish or bearish, is the wick of the candle. That's the low objectively. The high is the top of the wick. If you mark out anything other than that price, you are not marking out your highs and your lows. Because guess what? Hold on. I'm about to prove a point. If I call this my high, is that the high of market structure? The answer is no. If I zoom out, you can clearly see that, and like we can't tell where the bodies or the wicks are. We can clearly see I don't have my line at the highest price. I don't have my line at the high of market structure. It's that simple. And yet you're still gonna question me about like what? Bro, mark out the high. It's the top of the wick. Then zoom out to where you can't even differentiate between a body or a wick. Now what does that look like? It looks like the high of market structure. And guess what? Guess what this high is? It's the same price of this high on this 1 minute candle. And it's the same price as the high on that 5 minute candle, 15 minute candle, 1 hour candle, daily candle. So time frames don't really matter when you mark out the proper prices. When you mark out the proper prices, this right here, this is gonna be the lowest point of a 1 minute candle, of the 15 minute chart, of the 5 minute chart, but as well as the daily. How did I know? I'm I'm just it's the lowest low of the downtrend. That's the key. That's the lowest low. Then we went up and broke this and we made an overall high. Now we're coming back down for a correction. Here's so if you want a trade signal, I mean that's a buy and a half right there on gold. Price made an internal lower high, higher low, broke that high. We're bullish. Price should go all the way up to this TP. And now you've traded ICC properly. But guess how you would have done it before. You might would have been on a little too low of a time frame or something, and you would have been over here, and then you would have gotten in prematurely or something. You would have gotten in somewhere over here, had to sit through this drawdown, and you wouldn't have held your trade. You would have been getting into sells because you would have seen that price was making lower highs, lower lows, breaking and getting into sells. You just got to be patient enough to know that this is cool. And I actually might try to figure out if I can scope out an entry to get into this trade later. This is actually a pretty decent trade. I just don't want to chase it. So yeah, that's ICC, and those are a lot of those extra nuances that you just haven't thought about, and you can't blame you because you just don't know what you don't know, right? But see, but so now going back to this example, if we marked our lows out properly, we didn't get faked out anymore. Price didn't give us any real bearish confirmations. Like that's an indication. Okay, then you got this correction, and then you didn't get into any sells. Why? Because we broke highs. So this is important right here. Why would we not take this sell? We wouldn't take this sell because if we tracked our highs and our lows properly, we just broke above a high that sellers had in control. So how can I reasonably suspect that yeah, like buyers broke above a high that sellers had in control? How can I expect that all of this price action, let's go back to a 1 hour, 30 minute. Okay. How can I expect that all of this price action, all of this demand right here, that all these order blocks that led to buyers getting into the market to break this high, how can I expect that I'm gonna sell against that? Oh, but we're only trading ICC. We don't trade any ICT concepts here. Get that shit out of here. Order blocks. We don't trade no. Okay, well then shit. Lose your fucking trade then. I don't give a fuck. Right? I'm being honest. You would benefit from just understanding supply and demand. Like don't dick ride to the point to where you're gonna not know what you're doing. Come on. Over there looking like a glazed donut. So anyway, this is now a 2 hour and 37 minute video. I'm gonna conclude this here. I don't got nothing more to really say. I could keep going through a lot of different examples, but it's already a long watch, right? So, questions, thoughts, comments, questions, concerns. How do you think I did, bro?
Fuck with it.
You fuck with it?
Yeah.
Yeah.
Might have to divide the video up. It's like 3 videos.
Oh, huh. Yeah.
Too long.
What, like to post just the whole video on YouTube?
Yeah, don't post it on. I mean, post it on YouTube, but divide it up into 3 videos.
3 videos?
Yeah. It just gives you more content.
All right.
And people will sit for a 30-minute video. Nobody gonna sit for 2 hours.
All right, for sure. No problem. Yeah, this was recorded. I'm gonna figure out how to post it. Zeke was just telling me I should splice it up, post it multiple different videos. Normally I would just post it all at one time, because I don't forget the Holy Grail part when you post on YouTube. I'm gonna be very cryptic about what I post about the Holy Grail. I'm gonna help people out, but I'm gonna, you know what I'm saying? Oh, you mean to say don't forget to cut it out? I'm not gonna lie. See, that's the thing. I would leave it in there. I would leave it in there. I would leave it in there and post the whole thing. They're only gonna see it if they watch the whole thing. It was a small little part. You see what I'm saying? Leave breadcrumbs exactly. And then the thing is even if they see it, they're not gonna know how to apply it because the market scenarios are so different over and over and over and over and over. So they'll see how it was applied there, but they won't know how to apply it to Euro USD today. They're not gonna know how to apply it when they're back testing, so they're still gonna be like, Romano, I need you. But it's like I'll leave it in there for those who like are diligent because I have to have a threshing floor. I have to have a way to weed out people who are serious because $50 is not a lot of money. That's all I charge for proximity to me is $50. That's not. all of the like that's the kind of thing. The information is already out there. The information is free. When you pay, you're not paying for a course. You're not paying to, or anything like that. You're paying to just get closer to me on a day-to-day basis. So then you get exposed to all of the isms and things that I have to say.
Mm-hmm.
It's basically what it is. It's a no contract, month to month membership. You can cancel anytime you want. Don't care. You know. But it's just like I don't mind teaching and helping. I'm gonna keep doing that. Like I still gotta go over wick sauce. I gotta put wick sauce. I mean, this is just this week. There's so the issue is I go so in depth to the point to where it's like I'm not gonna sit here for 8 hours. But I'll be back next week
Mm-hmm.
and we'll pick up where we left off. Today was ICC the proper way with a little bit of hints. Next week will be wick sauce 1.0 and maybe 2.0. Maybe wick sauce, wick sauce, just wick sauce. And why wicks are important, how to trade them, which ones are important because they're everywhere. And then after that, the last major concept, I have a lot of little tips and tricks, other little entry models and stuff. But then the last tip and trick is gonna be the Holy Grail. But once again, I'm not, I can't, that I'm not gonna just post a deliberate video about only the Holy Grail on YouTube, but I will leave little hints in there for people who are gonna watch the whole thing through. So word. Going to going in depth is great because it gives people the right education in the proper order instead of being scattered about like most videos. Yeah, yeah,
The good class.
yeah. I had no clue what I was going to talk about today. I just said I had to do it. Wick Sauce Wednesday. But cool. So I've been in here for 3 hours, or well, 2.5 hours, or however long. No, not 3 hours. I've been recording for 2 hours and 42 minutes. I'm gonna stop recording and I'm gonna upload this on YouTube. And I'm chilling. I probably might pull up a chart and start looking to seeing if there's a gold buy to take. But that's about it. Wick Sauce 2.0 is the Holy Grail. Wick Sauce 2.0 is different from the Holy Grail. They're similar in concept, applied differently. The Holy Grail is the Holy Grail. The Holy Grail shows you where all of the corrections that you don't wait to end, it shows you where all of those correction phases end. That's what the Holy Grail does. So in a sense, it helps you find the highs and the lows of the market structure because there's gonna be a 1 minute candle. That's the low of the entire market. I'll teach you how to find it. Don't take it down. It's gonna be taken. It's not gonna be put up. It's not gonna be deliberately put up. I'm still mixed on this, but for right now, I'm being selective. So where I hope you guys enjoy it. I'm probably about to hop into a voice call and just chill. Um, if you guys want to talk, you can join me here and word. This video is gonna be on YouTube. Yeah, I know. It's cool.
So we want to ask them.
Yeah, like you just get to sit here and watch me lock in, huh?
Mm-hmm. Mm-hmm. how would you feel about